Whether you are interested in the financial markets actively, passively, or not at all, you have probably noticed the brisk Ragnarok in the stock market from like 2 weeks ago. Don't tell me that you didn't. My own mom keeps asking what's happening with those bitcoins. Anyways, if you have some part of your capital in single stocks, crypto or ETFs, you probably feel some cortisol just mosh pitting all over your brain. It's very tempting to start selling your assets in order to retain at least some profits. Many people who are in the financial markets only shortly eventually surrender to this emotional pressure. Now, it's no big secret that in cases like these you should keep calm and hold onto your assets or even buy some more for the discounted price. YouTube is full of channels focused on investing and understanding the economy and financial markets. Recently I have discovered one that stands out though. It's called Unconventional Economics and it's very true to its name as their content is different from most of other YouTube channels. It's highly informative, practical, and their unconventional attitude very much resonates with the nonconformity of Nietzsche's philosophy. So if you are interested in some practical, scrutinized knowledge on economy or finance, check the link down below. Nietzsche isn't necessarily the
man in finance, trust fund, 6'5", blue eyes.
But he can definitely teach you a thing or two about staying rational in the irrational marketplace. Nietzsche has unfortunately never had the opportunity to invest in S&P 500 as he died 23 years too early. Nevertheless, thanks to his philosophical legacy, we can arm ourselves with some of his knowledge. So if Nietzsche could witness the recent situation, what would he advise us to do? Based on the nature of his philosophy, Nietzsche would probably stay true to his contrarian attitude. So what would that mean in terms of one's behavior? To be a contrarian means to swim against the tide. It means to do the opposite of what most people are doing and, what's much harder than that, to act contrary to what your emotions tell you to do. To give you a clearer picture of what that exactly means, consider what one of the most successful investors, Howard Marks, has to say.
Thinking, and what I call the second level thinking, which is required to act against the herd. The common word is contrarian, and to sell at high prices, which are high because other people are optimistic, and buy at low prices, which are low because other people are depressed. We have to be aggressive when people are depressed and defensive when people are excited. In other words, we have to think and feel differently from others, and that's not easy. We have to be either unemotional people, or we have to learn the importance of emotional restraint and how to do it.
The reason I bring this up is that Howard's attitude greatly resembles Nietzsche's way of thinking. Here are the most important overlaps and insights in Howard's and Nietzsche's thinking patterns. Number 1. Healthy dose of skepticism. In investing as well as in life in general, it's better to err slightly on the side of skepticism. Bear in mind though that skepticism isn't the opposite of optimism. The opposite of optimism will be actually pessimism. Feel confused? Don't worry, just look at this graph. Pessimism is the belief in the negative future outcomes. But the approach of Mr. Marx and Nietzsche will be the one of rational skepticism. Skepticism is actually to be found between optimism and pessimism. The word skepticism comes from the Greek word skeptomai, which means to doubt. In our everyday life, we use this word more often in the negative context, which is not exactly correct. You can doubt something and still kind of believe in it. This happens to many people when thinking about the God. They have never seen one, doubt his existence, but still sort of believe that there might be something like that. So in terms of investing, applying the rational skepticism would mean to accept that you don't know. It's up to you whether you err on the bearish side of the pessimism or on the bullish side of optimism, but you should never feel absolutely certain when deciding your next move in the market. Number 2. Negative capability. Tied directly to rational skepticism, Another thing that binds these two brilliant minds together is the principle of negative capability. I have briefly mentioned this ability in the last video and will make another full dedicated video on this topic in the near future. But in short, negative capability means that you are able to hold two opposing and contrary thoughts in your mind at the same time. And not just hold them, but also to be okay with the feeling that something's off. The feeling that something doesn't quite make sense at the first look. In terms of financial markets, this means that when you get contradictory indicators such as Fed mentioning lowering of the interest rates and sudden major correction of the market, you don't hold onto your paradigm that lowering interest rates means immediately and always rising market, but you rethink it. Negative capability means you challenge your beliefs and views even if you are 100% sure that they are logical and rational. Sometimes what seems absolutely irrational and illogical is just a fact, a hidden link that hasn't been discovered and clarified yet. Hence, coming back to the aforementioned example, you might be right. Rising interest rates might indeed cause the rise of the market, but you never know if that occurs instantly, 3 months before, or a half year later. Number 3. Bold countermoves. Finally, a prerequisite of good philosopher as well as of successful investor is a significant amount of courage. You do the opposite of what the majority of people think is right. Of course, blindly following this philosophy isn't right either. You should always base your own judgment on your own analysis, experience, and healthy dose of the already mentioned skepticism. In the countermove strategy, you should use the behavior of other people rather as an indicator of what's happening in the market than as a rule to follow. Howard Marks summarized this in his exceptional book Mastering the Market as follows. We must strive to understand the implications of what's going on around us. When others are recklessly confident and buying aggressively, we should be highly cautious. When others are frightened into action or panic selling, we should become aggressive. Rational skepticism, negative capability, and bold countermoves. These are the tips Nietzsche would likely give us for today's unpredictable environment. Write these strategies down and reflect on them. Take a short walk and think about how they apply to your situation. They hide immense potential to improve your financial status as well as your life in general. If you found this helpful, feel free to like the video and subscribe for more of Nietzsche's insights. Thank you for watching and see you soon, fellow thinker.